I want to talk to you today about Wells Fargo EIN only business funding. So we are going to compare and contrast their line of credit, their letter of credit, their SBA loan, and their CRE loan, their commercial real estate loans. Don't go anywhere. You're going to love today's conversation. I guarantee it. Welcome back, folks, to another edition of the Awesome Sodi Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to do a comparative analysis of four financial products that Wells Fargo will actually offers to businesses. And you can actually get those products with EIN or without EIN. Very important, okay? Let me first give you an overview. If you want to qualify, if you want your business to qualify for Wells Fargo EIN only business funding, whether it is at the line of credit level, letter of credit, SBA loan, or CRE loan, you got to be in operation for 2 years. That's the minimum. Operational history, 2 years. Unless you have a strong relationship with the bank. If you have a strong relationship with the bank, you could be a startup and still qualify because they already have your transactional history with them. They've seen your cash inflows. They know that you have a lot of ka-ching with them. They actually can study your accounts and know if you qualify, okay? But if you don't have an MPR with Wells Fargo, a multi-product relationship with them, then you need to be in operation for 2 years. And I've said this before, EIN only business funding is possible. If you don't qualify for EIN only, you will qualify without EIN. In terms of revenue, $120,000 annually. This is gross income, pre-tax income, pre-tax revenue, if you will, not income. So pre-tax revenue, $120,000. Okay, so that's $10,000 a month. And it's very important to understand that MPR, Wells Fargo MPR, is really quintessential on most funding programs. They'll never say it, but if you don't have a relationship with Wells Fargo, they're not going to give you a lot of cash. That's just the way it is. I mean, that's how the game is played because they have to make money off of you for you to make money off of them. I mean, it has to be a win-win situation. And if you don't qualify for an EIN only business funding, and you want to qualify without EIN, you need to have a FICO score of 650. But if you have a strong MPR with the bank, then 550 is the minimum. Again, MPR means that you are having a multi-product relationship with the bank. You have opened several accounts with them. You have a checking account, you have a savings account, you have an investment account, you have a retirement account, an IRA account, or 401k, whatever it is, the more, the better. And in terms of application, you can apply at the branch or over the phone. You can also apply online, but really, honestly, we strongly recommend that you apply at the branch or over the phone because you apply online, you will be taken care of by an algorithm. Let's first talk about the business lines of credit. So when we talk about business lines of credit at Wells Fargo, you have four types of funding programs. You have unsecured business line of credit. You have the Wells Fargo business line of credit. You have the Wells Fargo Small Business Advantage line of credit. This is backed by the U.S. Small Business Administration. And you also have the Wells Fargo Prime line of credit. Those are the four programs. Let's go through each of them. First, we have the unsecured business line of credit. So there's no annual fee for the first year if you are a new customer. And the line oscillates between $5,000 and $100,000. The rates are as low as prime plus 1.75%. No collateral is required. We kind of love that because then you are able to preserve your personal assets. Okay, there's no, if you apply it properly, you will have no personal guarantee and no collateral. You have automatic enrollment in a free rewards program, and this includes Wells Fargo Business line of credit and Wells Fargo Small Business Advantage line of credit. And so at the end of the day, this business line of credit from Wells Fargo is wonderful for supplementing cash flow, for expanding your business, for covering unexpected expenses. Things happen, right? You run your business, stuff happen, and this month you have no cash, but you have people to pay, you have staff to pay, you have inventory to pay, you have suppliers to pay. Get the credit line if you can qualify for it. Okay, and other features that you might love with this card, with this business line of credit, you have MasterCard, Access Card, easy to use checks. You can access the line online or by phone, and there are no foreign transaction fees. We love that. Let me ask you a question. Big decision time. Are you interested in this unsecured business line of credit? That's a wonderful, right? That's a wonderful program. But guess what? There is another one, even better. You have the Wells Fargo Business Line of Credit. This is ideal for businesses in operation for 2 years at least with established business credit. Okay, the amounts will oscillate from $10,000 to $100,000. The terms revolving line of credit, no scheduled annual review. There's no collateral required. And in terms of if you apply without EIN, they will ask for a personal guarantee. They do require personal guarantees from any owner with 25% or more of the applicant business and a minimum combined aggregate of 51% ownership. And there are some fees with this line of credit. $95 for lines of credit between $10,000 and $25,000. $175 for lines of credit between $25,000 and $100,000. And there is a fee for cash advances, 3% for ATM and over-the-counter transactions using the business line MasterCard. Let's talk about the third business line of credit with Wells Fargo. So here we have the Wells Fargo Small Business Advantage line of credit. Again, this is at the SBA. This is backed by the US SBA. The funny thing is, everybody believes that when we talk about SBA loans, they believe that you only have the loans. No, you also have SBA lines of credit. All right, and Wells Fargo is the perfect example of an institution, a major institution offering a small business advantage line of credit. So this is ideal for businesses in operation for less than 2 years. If you're a startup, for example, this is kind of cool. And this is great also for businesses that are trying to establish or rebuild business credit with Wells Fargo. So the lines go from $5,000 to $50,000. This is a 5-year revolving line of credit, no scheduled annual review. Rates are as low as prime plus 1.75%. Interest is charged when you use the account. No collateral needed. And if you don't apply with EIN, you're going to have to post PG. So this line of credit requires personal guarantees from each owner holding 20% or more of the applicant business. And you must meet US SBA requirements, okay? So you need to think about it. And there are fees. There's an annual fee and a cash advance fee. Let me talk to you about the Wells Fargo business line, the Wells Fargo Prime line of credit. But before that, are you interested so far on those sort of funding program? Because at the end of the day, it's all about money, right? Now, this is not revenue, don't get me wrong, but this is still cash, because if you're having a cash crunch, if you have a situation going on in your house, in your business right now, where customers are not paying you fast enough to take care of your other expenses, you need that extra line of credit. So this is kind of cool. So the fourth line of credit that I want to talk to you today about is the Wells Fargo Prime line of credit. Here, the line of credit ranges from $100,000 to $500,000. Monthly interest-only payments. This obviously is secured by business assets. This is why the lines are so high, the amounts are so high. So you got to secure that. And typically, businesses with $2 to $5 million in annual sales will qualify for this business line of credit with this Wells Fargo Prime line of credit. And this is great for short-term working capital expenditures, large purchases, making bulk purchases for pricing advantages. And we love the fact that you have unlimited access up to the line limit during 1-year draw period. And this line is renewable annually, okay? And in terms of eligibility, in terms of the collateral, they want any business assets, non-real estate. You can use also accounts receivable, you can use inventory, you can use equipment. Let's now talk about Wells Fargo EIN only letters of credit, or just letters of credit in general. What is a letter of credit? This is kind of cool because a lot of people, when they think about business funding, they only think about business line of credit or business loans. Let me quickly educate you here. A commercial letter of credit is basically a contractual agreement between the banks using the credit that authorizes another bank to make payments to the beneficiary on behalf of the customer. So when you think about it, a letter of credit is a document from a bank that guarantees payment. So there are several types of letters of credit, and they can provide security when buying and selling products or services, okay? And the cool thing here is that you have seller protection and you have buyer protection through a letter of credit. Big decision time, big decision time. Are you familiar with letters of credit? Have you used them in the past? If not, this could be a great opportunity, especially if you work in a sector where you want to get some guarantees that you'll be paid, or you are dealing with suppliers internationally. You got to think about that. Are you in export? Are you in import? Are you doing drop shipping online? Are you into e-commerce? Those are things you need to think about, all right? But if you are familiar with escrow services, the concept is very similar. So banks will act as disinterested third parties. The bank doesn't take anybody's side, and banks release funds only after certain conditions are met. And letters of credit are common in international trade, but they are also helpful for domestic transactions like construction projects. Think about that, okay? And so I want to talk to you about two products that Wells Fargo offers in terms of business letters of credit. So they have the Wells Fargo commercial letter of credit. So this is secured by Wells Fargo deposits. In other words, you got to have some cash in the account for them to allow you, for them to issue you that commercial letter of credit. So this is great for international or domestic trade transactions, for fulfilling payment per contract agreement, for identifying delivery of goods and making final payments. And this has a renewable term and typically 2-week processing upon complete letter of credit application. You got to apply for this letter of credit, okay? And the second letter of credit is called the Wells Fargo standby letter of credit. So this again is secured by Wells Fargo deposit. This provides a secondary payment option for defined contract terms. So Wells Fargo will only draw on security in event of non-performance. So what I want to say here is that when you think about Wells Fargo letters of credit, they are all collateralized. They are all secured by deposit. You got to have some ka-ching, ka-ching, ka-ching in the bank for them to issue you that letter of credit. Let's talk about the SBA loans that are processed through Wells Fargo. One thing I need to clarify, when we talk about SBA loans, we are speaking about something very simple. The government, through the SBA, is backing up the loan, right? But you have to apply through a bank. And Wells Fargo, if you want to apply through Wells Fargo, that's kind of cool, especially if you have a relationship with them already. So one thing you can do is that with an SBA loan, you can request loan repayment terms, which means if you really think about it, lower monthly payments, or you can request lower down payments. In other words, the upfront costs are more affordable. Money, money, money. When we speak about SBA loans, what do we talk about? We talk about several types of loans, but the most prominent one, there are two prominent loans here. You have the SBA 7A and you have the SBA 504. Let me quickly give you the main differences between those two. This SBA 7A is designed for businesses looking to acquire an existing business, buy out a partner, expand to another location, purchase real estate or equipment, or those looking to combine any of these needs into one loan. Think about it. Are you into that situation right now? Talk to me. Talk to me. And an SBA 7A loan is appropriate for longer-term financing for businesses with net worth below $15 million and an average net income below $5 million. The loan amount, maximum $5 million. Terms are up to 25 years for commercial real estate and up to 10 years for all other projects. Interest rates can be either fixed or variable. It really depends on your agreement with Wells Fargo. Okay, so that's for the SBA 7A. Let's talk about the SBA 504. The 504 is designed for businesses looking to expand through land or building acquisition, construction, or equipment purchase. Okay, so if you are looking for a longer-term financing for your business, and your business has a net worth below 15 million and an average net income below 5 million, you can apply. The loan amount is up to $6,500,000 for the Wells Fargo portion and up to $5 million for the portion funded by the certified development company. So when we talk about the SBA 504, there are several partners involved. Okay, so you got to have the CDC and also and also Wells Fargo. And terms are up to 25 years for commercial real estate and up to 10 years for machinery or equipment. So something to really think about. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sorty Kiwi Show. We are also having a conversation today about Wells Fargo EIN only business funding. So we're having a comparative analysis of 4 types of products. As I've said before, and I've said it throughout the show, you can actually apply for those products either with EIN or without, okay? Because at the end of the day, I don't want you to leave this conversation thinking, oh, well, I don't have an EIN or I cannot qualify for EIN only funding, so I'm not going to apply. No. If you have personal credit that is stellar, or you have a strong multi-product relationship with Wells Fargo, give this a try. I want you to have an appointment at a Wells Fargo branch. I want you to sit with a representative and explain your situation, and they will take care of you. Okay. Now let's talk about commercial real estate, CRE. So with Wells Fargo, there's a lot of things you can do. Actually, if you're thinking about purchasing commercial real estate, that's kind of cool. You can actually obtain funding to expand your business or purchase new commercial property. You get up to $1 million in financing. You can secure a loan to purchase an owner-occupied or investment commercial property. And we love the fact that there are no origination or appraisal fees and no lender closing costs. The rates are competitive, okay? And we love the fact that they have $50,000 to $1 million. That's the loan amount. Up to 80% loan to value. Okay, which means that you're going to have to put some money down. There are options for expedited closing, and this is kind of open to small business owners and real estate investors. Okay, this is kind of cool, and we love the fact that this loan is pretty open. They will actually fund everything from office to retail to warehouse to light industrial to mixed use property to commercial condo to a special purpose. They can actually fund a lot of stuff. And in terms of industries, they actually are open. For example, you can use the money for auto repair, auto body, car wash, convenience stores, dental or medical facility, funeral home, gas stations, health club, gym, ice or roller skating, movie theater, parking garage, restaurant. The choice is yours, okay? So this is what they call generally accepted special purpose. And one thing I want to say also is that with Wells Fargo, you got to be ready with all the paperwork because they are really fast. Usually people think about banks as being very lethargic. They're too slow, but not anymore because they are adapting. In the last 5 years, based on our research, we have seen that banks as diverse as Chase, Wells Fargo, Citi, and Bank of America, they're catching up in terms of being really fast because they are just like, wow, we're sitting here looking at others eating our pizza. We don't want that. They don't want online lenders to eat their pizza. So now they're very fast. So get your paperwork ready. So for commercial loans, commercial real estate loans, you can actually purchase or you can refinance. That's the second option, okay? So you can actually refinance up to $1 million. So $50,000 to $1 million for your first lien, $50,000 to $500,000 for cash out portion or second lien, up to 75% loan to value. So you have to actually cough up the rest. And this loan, or this loan, is open to small business owners and real estate investors. Okay, this is kind of cool. We love the fact that here is a big financial institution that will actually accompany you throughout your project, your real estate project. This is really good. So to qualify for a commercial real estate refinance loan, you must have an eligible property type, such as office, retail, warehouse, light industrial, mixed use property, multifamily, more than 5 units, commercial condo, first lien position only, special purpose, first lien position only. And you can borrow against your equity. That's what it is, okay? And one thing I also want to say here is that you also have the commercial equity line of credit that Wells Fargo offers. And here you can use the flexibility of revolving credit that provides unlimited draws for your ongoing business operations. So the bottom line here is that Wells Fargo does have I would say, a variety of business funding programs to accompany your business. The only thing I want to mention, again, I've just said it before, you need to be prepared. You got to have the right documents. Please make sure you have your financial statements. Don't tell me that I just have good credit, or I just send them my bank statements. No, you want to appear legit. You want to look legit. You want to have a business plan. You want to have financial statements. And generally, when we talk about financial statements, people only stop at three. They will tell you, oh, you need a balance sheet, you need an income statement, you need a statement of cash flows. But there is a fourth. Actually, there are two more. There's a fourth financial statement. That is a statement of owner's equity. You got to have that also. And the fifth financial statement, it's not really a financial statement. It's more the disclosures, the accompanying statements to the financial statements. Okay, and this is also part of the financial statements according to U.S. GAAP, U.S. generally accepted accounting principles in the United States. Okay, so I'm just giving you all the information you need to boost your chances of approval. So the big question is, why choose Wells Fargo? Big decision time. Why should you choose Wells Fargo in the first place for your business funding? Because the whole idea is, well, big banks are very lethargic. They're very slow. They don't like people who have bad credit. They don't have the infrastructure, the processes in place to actually to approve loans fast. But that's not true. That is not true. Most entrepreneurs make two mistakes when it comes to big national banks. Number one, they think that those banks don't like entrepreneurship, or they're just risk averse. They're not. The only thing is you have to have a relationship with them. And the second thing is, people think that it takes banks a long time to close a loan, and that's because banks are generally they're like behemoths. They're huge, so it takes a lot of bureaucracy to approve things. Again, I want to tell you, it's all about the relationship. If you have cultivated the relationship beforehand, when it comes time to approving your loan, things will move faster because they already have your information. When you have a conversation with a loan rep before applying for a loan, things move faster because they already have your information. If you apply online, or you just walk into a branch and apply without cultivating the relationship beforehand, it will take time. When I speak about cultivating a relationship, I'm not asking you to go and just, call the banker on a first name basis. No, I'm just trying to tell you that you need to start a conversation long before you apply for a loan. Okay, Wells Fargo is a national bank with branches in many communities. So its services includes home loans, mortgage refinancing, and home equity loans. Okay, and we love the fact also is that they do have a global presence. Okay, and they do have a few tools that we love. For example, they have Business Credit Finder tool. This is really good. They do have a loan payment calculator. This is really good. And they have a whole constellation of educational resources that are really beneficial for many millions of small businesses in this country. So what just to kind of close today's conversation, you don't have to go with Wells Fargo, but if you already bank with them, if you like their service, give them a try when it comes to business funding. Start by building a relationship with them, and at the right time, apply for a loan, but do it over the phone or preferably at a branch. Thank you so much for your attention to this conversation, folks. Just kind of quickly recap. I was talking to you about, I was actually doing a comparative analysis of Wells Fargo line of credit, letter of credit, SBA loans, and CRE loans, commercial real estate loans. And I spoke to you about also why you should choose Wells Fargo if you so desire. Thank you so much for your attention. I'll speak to you another time, but until then, remember, stay marvelous.